This video was inspired by one of our viewers. When the end of the month arrives, there are some steps that you need to take to close out the activity in your QuickBooks Online account. All checking, savings, and credit card accounts need to be reconciled. That involves taking that month's statement and ensuring that all transactions have been accurately recorded in QuickBooks Online. If you have a loan, use the loan statement to ensure that the payment is allocated to the appropriate accounts, such as loans payable, interest, and escrow. Ensure that the balance in QuickBooks Online for the loan matches the balance on the loan statement. In this example, the loan payment is $1,750. However, only $500 of that payment goes towards paying down the loan balance, which is the principal. $900 goes to interest and $350 goes to escrow. So for the journal entry, the bank account is what was used to make the payment. That account will be credited $1,750. Loans payable, which is a liability account, will be debited $500 to reduce the loan balance. The interest expense account will be debited $900 to increase expenses. And the escrow asset account will be debited $350, which will increase that account. If you use invoices for clients, you can run an accounts receivable aging report to see all invoices that are overdue by 30 days or more. This is a valuable tool for following up with clients on outstanding payments. If you're recording bills from vendors, then you can run an accounts payable aging report to see any bills that are overdue. Paying bills in a timely manner fosters trust and goodwill with your vendors. Did you receive payment from a customer before providing products or services? Then, in the month that you provided those products or services, you'll use a journal entry to move the funds from the deferred revenue liability account to the appropriate income account. In this example, the customer paid $475 on June 4th, 2025 to rent a facility. The facility was used on July 4th, 2025. The payment would initially be recorded in the deferred revenue account in June. This is a liability account because the service is owed to the customer. Then in July, a journal entry would be used to debit deferred revenue by $475 and to credit facility rental and income account by $475. If you're using accrual basis accounting and you have prepaid expenses, you'll use a journal entry to move the portion that was used that month to the appropriate expense account. In this example, the business paid $1,200 for a year's worth of insurance. That works out to $100 per month for insurance. The initial payment will be recorded under prepaid expense, which is an asset account. Then each month, a journal entry would be used to credit the prepaid expense account by $100 and debit the insurance and expense account by $100. For a nonprofit with restricted funds, if any of the grantor requirements have been met, you'll want to use a journal entry to reclassify the funds from restricted status to unrestricted status. And you'll also want to identify which funds are still restricted at the end of the month so that you can update the statement of financial position to show which portion of the assets have restrictions. We delve deeper into the steps to set up the nonprofit accounts and to record the journal entries in a video called How to Add Reimbursement-Based Grants and Restricted Grants in QuickBooks Online. When you run your profit and loss statement, otherwise known as a statement of activity for nonprofits, look for any amounts in the uncategorized income and uncategorized expenses accounts. Every transaction needs to be categorized. Then run your balance sheet, otherwise known as a statement of financial position for nonprofits, and look for any amounts in the uncategorized asset account. Again, every transaction needs to be categorized. Having a process in place will allow you to streamline tasks at the end of the month, and it will ensure that you can catch and fix any issues early on. Thanks for tuning in, and I wish you the best at month end.